Good day, ladies and gentlemen. I'm Pelshia, the moderator of this call. Thank you for standing by and welcome to Nucleus Software Quarterly Earnings Conference Call. For the duration of presentation, all participant lines will be in listen-only mode. We will have a question and answer session after the presentation. I would now like to hand over the conference to Swati Haguja. Over to you, Swati.
Thanks, Persia. Good afternoon, everyone. This is Swati from Investor Relations team at Nucleus Software. A very warm welcome to all of you for this Nucleus Software earnings conference call for the quarter and 9 months ended on December 31st, 2022. For discussion, we are here from the management team, Mr. Vishnu R. Desai, our Managing Director, Mr. Parag Desai, CEO and Executive Director, Mr. Anurag Mantri, CFO and Executive Director, Dr. Ritika Desai, Executive Director and Chief Innovative Officer, Mr. Brajesh Khandelwal, Vice President, Neo Business, Mr. Ashwini Arora, Senior Vice President, Global Customer Success Team, Mr. Tapan Jaiswal, Financial Controller. As you all are aware, Nucleus Software does not provide any specific revenue earning guidance. Anything which is said during this call, which may be reflect our outlook for the future or which may be construed as a forward-looking statement, must be reviewed in conjunction with the risks that the company faces. An audio and transcript of this call would be shortly available on the investor section of our website, www.nucleussoftware.com. With this, we are now ready to begin with the opening comments on the performance of the company, and post that we would be available for Q&A session. With this, I now pass over to Vishnu sir. Over to you, sir.
Thank you, Swati, and a warm welcome to all of you for this investor conference call. As we are celebrating 3 decades of creation of intellectual property on Indian soil this year, allow me to indulge in giving you a perspective on the subject. 3 decades back, the banking and financial services industry in India started making bold moves by adopting a completely new business model. This was the business model of retail lending that would give boost to the lifestyle of middle class of the nation and also make BFSI sector itself robust. Along with these bold moves, BFSI sector made another bold move, that of adopting homegrown information technology solutions. It was these pioneering moves by the BFSI sector that we are celebrating. Thanks to BFSI sector pioneering bold steps, the sector as a whole has grown to the level that today nearly half of the industry's loans are retail as compared to less than 5% 3 decades back. Thanks to their confidence in homegrown intellectual property and in the company that created that intellectual property, the retail assets originated and or serviced and or collected using our platform are in the range of 40 lakh crores or equivalent of $500 billion in India alone. The amount of payments and collections made by our transaction banking product are worth $15 trillion per annum on our transaction banking platform. Over 200 reputed institutions in 50 countries are using this intellectual property created on Indian soil to run their businesses. We would like to convey our gratitude and thank all of you investors from the bottom of our heart for taking all the risk with us. We have been trying to understand and visualize our customers' needs and come up with solutions that would fulfill those needs and in turn benefit our investors as well. We would like to assure you that you will continue to find us far ahead when it comes to fulfilling our customers' needs and expectations. Thank you so very much once again for being with us on celebration of this major milestone in our journey and looking forward to continuing to play a role in building the economy together. Thank you.
Thank you so much, Vishnu sir. This is Parag here. Good afternoon, everyone. I welcome you all to this investor call. As regards this quarter, it has gone more or less as per our expectations, both in terms of financials as well as in terms of attrition, a key area that we have been talking about. As we have been updating, a few more AMC contract revisions are closed in this quarter, and that is reflecting in our financials. This has been possible due to the focused and untiring efforts of our leaders and their respective teams who have put in, and I really wish to thank them for that. I do wish to sound out here that there is a one-time retrospective effect in these revenue figures due to the reason I mentioned. The attrition as expected has significantly come down, and we do expect and hope that it stays that way. Another quick update I wish to place is that we did complete 5 of our FinOne new implementations in this quarter. We continue our focus on transforming our FinOne and CashActual customers. As you know, FinOne and CashActual are our legacy product platforms to our next-gen technology platforms, FinOne Neo and Finexia respectively. At the same time, and as we have mentioned in the past, we continue to enhance our project management capabilities by providing sharp focus trainings to our project and program managers so that they are prepared to take on this transformations much faster. Thank you very much once again, and over to you, Swati.
Thank you, sir. Tapan sir, now I will request you to put some light on the financial numbers. Over to you, sir.
Thanks, Swati. Thanks, Swati, and good afternoon, everyone. Key highlights from financial as for revenue.
I'm sorry to interrupt you, sir.
Hello.
Tapan sir, so your voice is not clear, sir.
Okay. Is it better now?
It's better.
Yes. Please continue.
Please go ahead, sir.
As for revenue, our consolidated revenue for the quarter is at rupees 169.3 crore against rupees 130.1 crore quarter-on-quarter and rupees 121.6 crore year-on-year. Overall revenue in foreign currency, including India rupees revenue, is $21 million for the quarter against $16.6 million quarter-on-quarter and $16.3 million year-on-year. Product revenue for the quarter is at rupees 143 crores against rupees 106.2 crore quarter-on-quarter and rupees 99 crore year-on-year. Revenue from project and services for the quarter is at rupees 26.3 crore against rupees 23.9 crore quarter-on-quarter and rupees 22.6 crore year-on-year. Moving on to the expenses part, cost of delivery including cost of product development for the quarter is at 59.9% of revenue against 76.5% of revenue quarter-on-quarter and 79.5% of revenue year-on-year. In absolute terms, this is rupees 101.4 crore against rupees 99.5 crore quarter-on-quarter and rupees 96.7 crore year-on-year. As for marketing and sales expenses for the quarter is 4.2% of revenue against 4.3% of revenue quarter-on-quarter and 3.8% year-on-year. In absolute terms, this is rupees 7 crore against rupees 5.7 crore quarter-on-quarter and rupees 4.6 crore year-on-year. As for G&A expenses for the quarter is 7.8% of revenue against 10.6% of revenue quarter-on-quarter and 12.3% year-on-year. In absolute terms, this is rupees 13.3 crores against rupees 13.7 crore quarter-on-quarter and rupees 14.9 crore year-on-year. EBITDA for the quarter is at rupees 47.6 crore, which is 28.1% of revenue, against rupees 11.2 crores, which is 8.6% of revenue quarter-on-quarter, and rupees 5.4 crores year-on-year. Other income from investment and deposits is at rupees 8.2 crore against rupees 6.9 crore quarter-on-quarter and rupees 7.1 crore year-on-year. Total other income for the quarter is rupees 9.3 crores against rupees 8.3 crore quarter-on-quarter and rupees 8 crore year-on-year. Total taxes are at rupees 13.7 crore against rupees 3.9 crore quarter-on-quarter and rupees 1.4 crore year-on-year. As for net profit, it stands at rupees 38.3 crore for the quarter against 11.03 crore for the quarter and 8.0 crore for the year-on-year. Other comprehensive income is at rupees 3.5 crore for the quarter against rupees 1.6 crore quarter-on-quarter and negative.
Sorry to interrupt you, sir. Your voice is breaking. Please check.
Should I repeat again on other comprehensive income?
So I'm sorry to interrupt you, sir.
Was that?
Dear participants, kindly stay connected while we connect the management team back on the call. I repeat, dear participants, kindly stay connected while we connect the management back on the call.
Sir, have you joined back?
No, ma'am, just a second, ma'am. Welcome back, sir. Please go ahead.
Yeah. Am I audible now? Is it clear?
Yes, sir.
Hello? Okay. So total comprehensive income, which includes net profit. Okay. So total comprehensive income, which includes net profit and other comprehensive income, is at rupees 41.8 against rupees 12.6 crore quarter-on-quarter and rupees 7.6 crore year-on-year. As for EPS for the quarter is at rupees 14.32 as against rupees 4.12 in the previous quarter and rupees 2.77 in December 31st, 2021 quarter. In terms of foreign currency hedges on 31st December 2022, we had $3.7 million of forward contracts at an average rate of 82.13. There is a mark-to-market loss of rupees 43 lakhs, which is taken to hedging reserve in the balance sheet. Revenue contribution from the top 5 clients for the quarter is 35.8% against 28.5% in the previous quarter. The order book position is rupees 569.3 crore, including rupees 548.2 crore of product business and rupees 21.1 crore of project and services business. In September 30th, 2022, the order book position was rupees 572.9 crore, including rupees 538.9 crore of product business and rupees 34 crore of project and services business. As for total cash and cash equivalent as on 31st December 2022 are rupees 533.8 crore against rupees 558 crore as on 30th September 2022. This includes balance in current accounts of rupees 35.2 crore, various schemes of mutual funds rupees 382.8 crore, fixed deposits of rupees 38.6 crore, investments in tax-free bonds of rupees 71.9 crore, rupees 5.3 crores in preference shares. With regards to receivables, we are at rupees 127 crores against rupees 73.5 crores previous quarter. During the quarter, there is a gross addition of fixed assets of rupees 1.12 crores, consisting primarily of rupees 0.58 crore on software, 0.14 crore on vehicle, 0.06 crore on plant and equipment, and rupees 0.34 crore on computers. Now I'll hand over to Swati.
Thank you, sir. With this, we are now open for question and answer session. I will now hand it over to you, Pelsia. Over to you, Pelsia.
Thank you, ma'am. If you wish to ask a question, please press star and 1 on your telephone keypad and wait for your name to be announced. If you wish to cancel your request, please press star and 1 again. first question comes from Gun Singh from Counter Finance. Please go ahead.
Hi, sir. Congratulations on the great set of numbers for this quarter. I see that our revenues are amongst the highest we have achieved in any of our previous quarters. And also in terms of margins, we see that the margin for this quarter is around 28% operating margin, whereas it was about, say, 7% for financial year 2020, around, say, on an average 15 to 20% previously. So, sir, my question is regarding whether this is a one-off quarter in terms of revenues as well as margins, or can we say that this is the run rate going forward and we can expect this to be a sustainable number in terms of revenues as well as the margins? So can you please help me understand whether this is one-off or a sustainable kind of a thing?
Hi, thanks for asking this. This is Anurag. We have been updating, informing you all about various initiatives being taken at our end. And certainly, we are not seeing this as one-off quarter. This is the trend we are expecting to continue way forward.
Both in terms of top line as well as margins?
That's true.
So is it fair to assume that we can do, say, about 700 to 800 CR of top line for financial year 2024, looking at the current run rate?
So, while my earlier response was that we have been talking about the measures and those measures are showing results, but I would like to also mention that we do not give any guidance at all, any inferences at all.
All right. So not in terms of, say, revenues, but in terms of the operating margins that we are looking at right now, was there some initiative taken during this quarter or some fall in the, say, operational cost that we saw only during this quarter that led to this? Or, can we say that 28% is a sustainable kind of a margin going forward? Because, this was the highest margin that we have ever achieved in the history, I would say.
As Parag mentioned that this is also due to some cumulative effect. We have been talking about the AMC related discussions in the past. So that has led to this particular thing. And you are talking about the other aspects. So we continue to take a lot of optimization and improvement initiatives, and that is something which we like to continue as well. But again, as I mentioned, that any indicative aspect on these things we will not be able to provide.
All right, sir, got it. So if we remove the AMC effect of the cumulative that you mentioned, can we expect say about 25% going forward because of the initiatives that you
answered this already a few times. You are talking about various, in fact, the guidance aspect or indications, we will not directly provide that. Hope you appreciate this particular thing. But as I mentioned, that we continue to take multiple initiatives, and that is what I would like to update you at this point.
Shall I move to next question, sir?
Yes, please.
Thank you, ma'am. Next question comes from Rahul Jain from Dolat Capital. Please go ahead.
Yeah, hi. Thank you. Thank you for the opportunity. Is my line audible?
Yes, sir.
Yeah. Just to extend the thought on the current thing that the I'm not speaking for the revenue guidance, but that I thought that this growth is led by
Rahul, your voice is not clear. Please repeat again?
Yes, just one more.
Ma'am, we withdrawn his question, ma'am. Next question comes from Harish Toshniwal from Bottom of Research. Please go ahead.
Hi. Hello. Thanks for the opportunity. Am I audible?
Yes, sir.
Hello. Yes, yes. So thanks a lot, sir. So I think, sir, a few questions. One is that if we look at the last Q1 and Q2 on calls, you mentioned that the price hike is going to be effected for most of our clients over a period of next 1 to 2 years, basically H2 of FY23, and obviously some part of H24. The entire series is going to see a series of price hikes across different clients for us to reach the expected levels. So just want to understand that when we look at this quarter's revenue, you think that all the price hikes are now there in the number, or are there more price hikes down the line? And this is my first question. I have one more question, and if you want, I can ask now or I can ask later, sir.
Dear participants, kindly stay connected while we connect the management back on the call. Dear participants, kindly stay connected while we connect the management back on the call. Dear participants, kindly stay connected while we connect the management back on the call. I will welcome management team. Please go ahead.
Hi. Am I audible, sir?
Yes, please go ahead.
Yes. I had two questions. One is that in the last call, we mentioned that the price hike is going to continue over the next few quarters because it will take some time for negotiating the price hikes across most of our customers. So one, I wanted to check that when we look at this quarter's revenue, is it just a part of the price hike that for few of the customers we have taken, but we are yet to see more price hikes in the coming quarters? That's the question number one. And so the second question is on the growth part. Now, we have seen a lot of NBFCs, etc., who have been growing even within India. Now, going forward, how do we plan to tap that volume growth? Because last call you mentioned that we are also tying up with system integrators to improve our growth rate in Europe, Southeast Asia, etc. Because when we look at our margin profile also, I think being a product company, our margins in India, etc., is more than 40-50%. It's the global business which is putting the overall margins down. So wanted to get your sense as to what is the plan to improve the operating leverage out there and how should we look at it? So these two questions.
Sure. This is Rajesh Khandelwal. Your first question is regarding continued AMC price hike. So that effort is going to continue. The precise details will not be shared, but that effort will be continued. Your second
Just one thing, Rajesh. Sorry, sir. Just one thing on this part. I would not need any specific detail, but just want to understand that, for example, if we have around 200 clients, then what percentage of clients we would have initiated the price hikes with? Some sense, because the only thing which becomes confusing is that when we look at this particular quarter's revenue, I'm not asking for any guidance, but wanting some sense about that the sustainability of this number. Are there any one-off fees or?
I can only say that we have been pursuing with our customers to get right value for our offering, and that effort will continue. I don't think I will be able to share details beyond that. So that is a response to your first question. Your second question is on the increased potential on NBFC market in India. Yes, we are working with various prospects to engage them with our new product offering, and that's a continuous effort, in fact, and so that's how it is going to continue.
And as regards, I think you also wanted to mention about outside India. So two parts to it. One is the transformation that I had mentioned. This is Parag here. So the FinOne customers and the Cash at Will customers, many of them are outside India. So that's one part. And yes, we are making a conscious effort to now move outside India. The past 2 years, because of COVID, we were largely centered in India, and also most of the growth we saw was from India, the traction, I would say. So on both these fronts, whether it is our legacy customers outside India, efforts are on to convert them onto the new platforms, as well as our reach we are now trying to make into regions outside India. So I hope that completes the 3 parts of your query.
Thank you, sir. Next question comes from Jatin K from Alpha Capital. Please go ahead.
Hello, sir. Congrats for a good set of numbers, and thank you for taking my question. Sir, my question is, in your opening commentary, you said that there is one-time retrospective effect in the AMC. Can you please elaborate more on this item? How much is the retrospective effect, and what was this amount? Why was this amount?
Okay.
So we will not be able to really give the split or the details that how much has been contributed by retrofit and how much had been contributed by non-retrofit related business. We will just like to reiterate that there has been an impact because of these retrofitted cases, which is part and which is just one part of this particular increase.
No, sir. As in, if I look at your revenue, it is now 170 crore versus it was 130 crore last quarter. So it's like 40 crore increase. Can you give some idea how much is because of AMC, how much is because of retrospective, and how much is our growth from new clients? So maybe some idea, even rough idea, would be helpful, sir.
I'm afraid we will not be able to give you even an indication about that.
But then, sir, that will keep investors in the dark, as in we have basically no idea how is the company been able to grow so well in this quarter. So maybe some indication, because if you look at all of my previous participants, all were trying to get some indications on that front also, sir. I'm just requesting you to give some indication.
So what I would like to say is that as far as the total growth is concerned, close to 50% has come from retrofit. I hope that gives you some.
Yeah, so, and that retrospect is like one time only. That will not continue.
That's right. But as we indicated that this is an ongoing process. So few of the business exchanges and discussions with the customers have been concluded, which has led to this. Few of the business discussions with the customers are continuing.
And even if we take more AMC increase, that will also have this retrospective benefit, even for more.
So the ones which I will say discussion in progress will definitely have some retrofit impact.
Sure, sir. And would you like to comment, as in, let's say if I have 100 clients, how much we have taken the AMC increase and how much are still pending?
That certainly I will not be able to share.
Sure, no worries, sir. Thank you.
Thank you. Next question comes from Chirag Kacharia from Ashika Institutional Equities. Please go ahead.
Hello, sir. I just first time I have looked your company and I have a couple of questions. We are into the business since 90s and the industry has grown really well in India, particularly IT sector, even BFSI. Then why we not participating in that growth? Second, a lot of outsourcing opportunities also come in this last 3 decades, but still we not meaningfully participating in it. Third, I request you to share investor presentation or something so investor community and even analyst community can have some better idea exactly in which domain or in which expertise we have in IT sector. So yes, sir, just this from my side.
So just to reiterate that we are in product organization, so we handpick the outsourcing opportunity, and that we have been doing for some time, and we continue to do the same thing.
Okay, and who are our peers? If you can name any global or local.
We do not share the competitor information in these forums.
Okay, sir. And what is the size of opportunity in which we are right now, in the services which we are right
now? I will just like to mention that with the product capabilities we have both in retail lending and transaction banking space, we are definitely approaching some very exciting opportunities. But besides that, the quantum or an indication will not be able to share.
Okay, sir. Thank you. All the best.
Thank you.
Thank you. Next question comes from Arun Malhotra from Pro Capital. Please go ahead.
Yeah, good afternoon. Congratulations on a fantastic set of numbers. Just wanted to find out the use of excess cash which is lying on the balance sheet, because if this quarter is any indication, we are going to generate large amounts of cash in the future also, plus the commentary which you have given. So any indications on the use of cash which is lying on the balance sheet?
Thanks for raising this question. This is Vishnu Dusad. Our board keeps looking at the most appropriate uses of the cash that our business generates, and from time to time it has been doing buybacks and so on to make sure that there is a right balancing between cash that is kept with the company and cash that is distributed with the shareholders. So our board will continue to apply its mind to the subject and will come back with the results.
Sure. Because I just want to reiterate that the cash which is lying on our balance sheet is earning only 5-6% of kind of return, and is also bringing down the ROE and hence the valuations. So if there is no acquisition or use of cash which can lead to growth for the company, I think it would be more prudent for the management and the board to distribute it to the shareholders. That would be my suggestion, which should be considered by the board.
We will certainly take your suggestion to the board.
Sure. Thank you, sir.
Thank you. Thank you.
Thank you, sir. Next question comes from Imran, Contractor Quantum Investments. Please go ahead.
Hello. Hello.
Yes, sir. Please go ahead.
Yeah. My question is also regarding the one-time renegotiation of AMC which came into this quarter. So I think they have given an indication that the 50% of the growth has taken place because of that. Is my understanding right?
That's right. You have the right understanding.
Yeah. Thank you very much, sir. Thank you.
Thank you.
Thank you.
Thank you. Next question comes from Vaibhav Bachaya from Honesty and Integrity Investments. Please go ahead.
Hi, sir. Thanks for providing the opportunity. On the AMC again, I don't want to know any numbers or any details which you would not like to share, but this revision is this retrospective effect is for the revenue from 1st of April, or it is also some revisions for last year as well, which has come into this quarter. I just wanted to know that.
Okay. This is from this financial year itself.
Okay, so that's for this financial year only. Okay, and secondly, obviously, we last year we faced severe margin pressure because of this employee cost increment, and that's why we have to initiate these AMC renegotiations, which is very good, and it's heartening that we have been successfully doing this. But in your assessment, have we been able to fully pass on that cost which we saw a very sharp increase in FY22 in terms of per employee cost? Have we been able to fully transfer it, or you think that still there is a long way to go in terms of whether our AMC contract will come back to the similar profitability as they were before March 22?
So just wanted to clarify that these two things had happened together, but they are not linked. Our initiatives to increase the CNB for our associates was in response to appreciate their knowledge and contribution, and at the same time, our discussions with our customers for increasing the pricing is related to we asking our customers for value-based pricing. So they have been, in fact, many of our customers, or in fact all of our customers, are growing tremendously on our platform, and our discussions with them had been happening for some time about value-based pricing, and this was a result of that.
Okay, so yeah, I understand that those two might be unrelated things completely. But on a net basis, one is a cost and one is price. So on a net basis, do you think on the AMC contract, on the profitability front, again, I don't want to know the numbers, what is the margin that we are earning on AMC contract and all of those things, but do you think that we will be back to similar kind of profitability in AMC contract as we were before 2022 financial year, or we are still there is some time to achieve that?
So we are back there, and we will be continuing like this. That's going to be my response.
Okay, that's it from my side. Thank you.
Thank you. Next question comes from Arishit from DU Research. Please go ahead.
Hello, sir. Sir, my question was that you mentioned two statements. One, you said that this quarter is a sustainable one at some point of time, that the revenue and it's going to be a recurring event of price hikes and maintaining this margin, what you said. And at the same point of time, you said that 50% of this quarter's incremental revenue was because of renegotiation. So my question is that if I adjust that renegotiation, then our sales would be more around 155 crore and profit around 30 to 35 crore of operating profit. So should we take that as a sustainable base and build for and basically look at it, or do you think that there are further price hikes which will help us support even the current year's momentum, current business momentum? Just wanted to clear because your statements were slightly different in terms of what it can mean.
My response would be that we are putting all the efforts to ensure the sustained growth. That is what I would like to tell you. I will not be able to give any indicative references to you in this regard as well.
Okay. No, but when you say sustained growth, you mean pricing or you mean volume? Because it's a sustained growth in terms of this quarter had a renegotiation advantage, X of that advantage or on the base of this quarter itself?
The first thing is that this is going to be both on the pricing as well as the volume. The second thing is that I just mentioned that we are having the discussions. There is a disturbance from your side, it seems. Hello?
Sorry. Yeah.
Yeah. So what I'm saying is that it's on the both accounts. It's basically on the pricing as well as on the volume as well as, and I would like to also add that as I mentioned, that we have concluded few discussions with the customers, and we will be having some more discussions further on the same pricing related discussions. So that's going to continue, and then of course we are going to different geographies, so that impact will also be there in quarters to come.
Understood, sir. And sir, when we look at this quarter, our India business has done very well. We have grown from 60 to 85 crore top line in India business, but most of the other geographies has been largely flat, and probably margin have also been flat. So this price increase part and the volume growth, if you can throw some color on what is happening in the global geographies, and some color on our strategy to tie up with system integrators to penetrate that, or how do you look at that piece of business?
So you are very right that the current quarter's growth is predominantly because of market linked growth, but we are laying down various strategies to expand our presence in other geographies as well, and we are hopeful that we should be able to really expand the business in those geographies also in quarters to come. Okay.
And one last question, sir, from my side. We completed the buyback last one on 22nd Feb 2022, around February 22, if I'm not wrong. So I think 1 year is I just wanted to check that what is the SEBI restriction of the time gap between two buybacks? What is the timeline before which we can't think of the buyback?
Sir, this is Poonam. Actually, the restriction is 12 months. So before 12 months, we cannot initiate the second buyback.
Okay, and that 12 months will end on February 2023 itself?
Yes.
Understood. So just one thing. So I think this buyback was actually very helpful. And I'm not saying, obviously, we need to keep some cash on our balance sheet because of the nature of the work and at the same time for any inorganic opportunities. But this 150-200 crore of annual buyback, which at least which is going to keep our balance sheet healthy, would suggest that a board can consider that, because that is a very healthy indication of the management and company wanting to share the benefits with all the shareholders.
Certainly, we will suggestion to the board.
Okay.
Thank you.
Thank you, sir. Thank you.
Thank you. Next question comes from Samar Singh from TPF. Please go ahead.
Good afternoon. Thank you for the opportunity. My first question is, again, about the AMC pricing revision. I think we were looking to get 8 large customers onboarded with the new AMC pricing, and I think as of second quarter, 3 of them had been on board, had come on board. Could you just tell me, as of the end of the third quarter, how many customers have come on board out of the 7 or 8 that we were trying to get revised pricing from? Hello?
Hello, sir.
Yeah. So we will not be able to really give this insight as well about the number of customers.
Okay. But suffice it to say that for the revenues for 9 months, is it reflecting all the price hikes that we wanted to get done this year, or we will expect some sort of one-time revenue in quarter 4 as well?
So as I shared that there are some discussions going on with our customers. Some have been concluded, some are still going on. So definitely we are hopeful to conclude those discussions in the next quarter. And if that happens, then definitely there will be a retrofit impact coming for those discussions as well, those conclusions as well.
So just to clarify, the next quarter being the current quarter 4, or you're talking about quarter 1 of next year?
Yeah, the Q4.
Q4, okay. And is our order book reflecting the new pricing, the revised AMC rate? Because the order book does not seem to have moved by much.
Yes, the order book includes the new AMC increase. It includes.
Okay, so are we losing orders from some of the other geographies? I think there was a total increase of only 10 crores in the order book, if I'm not mistaken.
So the basically order booking number is inclusive of both AMCs as well as non-AMC related new orders being booked.
Right. Okay. And how many of our top 10 customers are now on FinnOne Neo?
We actually do not provide product-wise customer details. We will not be able to share these inputs as well.
Okay. Okay, let me ask the question a different way. We are working on 2 objectives mainly for this year and next year. One was getting the price revised revision so that our pricing correctly reflects the value we provide to our customers. And the second one was changing the composition of the product, which is sort of moving our customers from the legacy product to FinnOne Neo. And last quarter, I think Vishnu I mentioned that 2 or 3 customers of our large customers were on FinnOne Neo, and that there will be a big push this year. So, if not quantitatively, could you talk about it qualitatively in the terms of how we are doing in the second aspect of converting our customers to FinnOne Neo?
The FinnOne customers movement to FinnOne Neo customer with transformation initiatives are progressing well. They are progressing well and they are as per the plans.
Okay. The last question from my side. I think in the other geographies, which is Southeast Asia, Far East, Middle East, we've seen some recovery, but it's still trending below pre-pandemic levels. And I think the issue we had was integration and nutrition. I think both.
Your voice is cracking. I couldn't really hear you.
Am I audible now?
Is it better?
Yeah, so I was saying, talking about the other geographies, Southeast Asia, Far East, Middle East, we've seen some recovery, but we're still trending below pre-pandemic levels. And I think our issue we had highlighted the last of calls was issue of inflation and attrition. I think both those issues have been sorted now. So is there a reason why we are not back up to, historical revenue and levels in these geographies?
So while both the constraints have been they are settled now, immigration is also has completely opened up, and the attrition related challenges also got settled. So what we are currently doing is that there had been because of these two factors, the implementation progression and all these things are definitely impacted. They are being brought to the control now, and with these two enablers being there, we expect the things to move much faster in the current quarter as well as next quarter.
Okay,
There is always a cascading impact. So the immigration has been tackled, the attrition-related things had happened, those things, but the transformation projects are getting in shape now, and once these are settled, this quarter onwards, the things will start showing the reflections.
And as part of this also, I think in the Far East we've done multiple FinOne cloud implementation. So is a part of that also that, on the cloud platform, the implementation fee is lower, but we earn a higher recurring revenue? Is that a part of this lower revenue in the Far East as well?
In the Far East, we have our services customers, and yes, few of them are on the cloud, but definitely not all of them. It's not related to that. It's basically related to some of the local business developments there. And of course, as I mentioned, that it takes some time for customers also to restart the engine. Far East has been blocked by immigration perspective for close to 2 years. So things have started opening up, and it's going to take its own group and time before the things start becoming to the normal. So the trends are reversing, and as I mentioned that you will be getting you will be seeing a different type of improvement coming up, being reflected in the current and next quarters, what I mentioned.
Okay, thanks. I'll come back.
Thank you. Next question comes from Rahul Jain from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. Firstly, two bookkeeping number. One, what is the USD revenue you said for the quarter, and what was the employee count?
Hello?
Yes.
Am I audible?
Yes,
Tapan, please
you
carry
are.
on.
Okay. So revenue number was $21 million for the quarter, and $16.6 million quarter-on-quarter, and $16.3 million year-on-year. This was the revenue number.
Right. Employee.
And as for the headcount, the headcount was 1,731.
Okay. Now, my question is that even if we see the outside the AMC revenue, the jump is quite significant, close to 15%. So was it led by faster ramp up of some past deals that were affected by attrition thing which we still have, or this is general business traction that we have?
This is the general business traction. That's the thing.
And this headcount number is still significantly lower than what we used to have, let's say, 8-10 quarters back. So is there a reason why we would like to operate at this level, or this is a net outcome while we want to have a much higher headcount number?
Actually, last year we have invested significantly in onboarding young talent, young minds. We continue to do the same this time. In addition to that, we are also working on the productivity improvements at our end. So these two things going in hand in hand, we are talking about onboarding young talent in addition to the productive measures.
Right. But so you're trying to say this 1,730 number is an ideal number for the current business level, and as the business grow, we may have some headcount growth.
That is right.
Yeah. And just to clarify on the retrospective effect on the number, so are we trying to say that there is a retrospective quantum which is taken as a lump sum for past period, or the current AMC revenue that we might have booked during the quarter is the normalized run rate from a go-forward basis?
There is a cumulative impact for sure.
Okay, so you mean to say if somebody was revised from 5 rupees to 10 rupees, that additional 5 rupees for one full year is also accounted in this quarter, and now going forward he would be booked as 2.5 rupees on a run rate basis.
Yeah, that's right.
Okay, so half of the quantum of growth, give or take, is coming from this factor. So the number, the quarterly run rate should be seen by adjusting that 20 odd crores from the current revenue.
Yes, that will be the case. That's right.
And accordingly, the profit, the PBT aspect should also be reduced by that quantum, because there may not be any associated cost attached to it as well.
Hello? Yeah, that's right. Your understanding is right.
Right. I understand that you're not going to say about the number of such pursuit, but since you already have, I think last quarter you mentioned that there are 2 to 3 clients which are in this process of acceptance, and they might have gone through this process during this quarter, maybe a few more. But now since you have people accepting it, how it changes in terms of your convertibility aspect going forward, because now you have reference, people who have adopted to the new run rate. Does that increase your ability to convert on this factor significantly?
That is right, but more than the having some customers being converted on a different price is not the major driver. The major driver is that we are leveraging the referenceability of the business value being delivered to the customers.
Right.
I hope that answers.
Yeah, I'm sure. So that was the case earlier also, before you were pushing this aspect much more strongly. It's just that, people are happy to get more for less, and that's what was the case in the past. And just to, if you could share one or two, comment that might have come from this successful cases where they accepted for the revised pricing, what they have to say on this? Are they just realize that, okay, yes, it's worth more and that's why they're giving it, or any incidents worth sharing on this front?
There had been a mixed response. Few customers' response is already there in your question itself. When you mentioned that they were getting more in less, so few of them had responded in that fashion. Few of them, the response was much more pragmatic. But overall, all of them had understood the rationale and the approach. Depending upon their outlook, in few cases we could progress much faster. In few cases it has taken longer time. But eventually every one of them had appreciated this and got themselves aligned with this.
And last bit from my side, just to understand who would qualify for this kind of a revision. Is it the entire client base, or we can say that client with a material history, let's say any client who would have come to us, let's say 5 years or prior, or 10 years or prior, would have been at a very poor base, and those are the cases where we see a hope of a big revision, while it may not be relevant for client with 5 years, 6 years vintage.
So of course, we are not going to the customers whom we have signed up or other whom we have onboarded very recently. In addition to that, we have a very comprehensive assessment process, and we run our customer portfolio through that comprehensive assessment process, and that gives us the customers with whom we should be taking it forward. Of course, the longevity of the customer, the time at which the initial contract was signed, their growth, all these things are part and parcel of that comprehensive assessment process, but the overall process is much, much beyond that.
Right. And have you seen case of client attrition also?
Not really. Not really.
Okay. So either they are negotiating, they are delaying or accepting, but there's no let go.
That's right.
Okay. Thank you. That's it from my side, and best of luck for the time ahead.
Thank you so much.
Thank you. That would be the last question for the day. Now I hand over the floor to Swati for final remarks.
Thank you, Palsia. Now we would like to thank all the investors for joining us today for this call. I now pass over to Vishnu sir for his closing comments. Over to you.
I would like to take this opportunity to thank you all for your continued interest in Nucleus Software, and we reiterate our commitment to deliver value to all our stakeholders in decades to come. Thank you so very much.
Thank you. That concludes our conference for today. Thank you for your participation. You may all disconnect now.